Hi, this is Joseph. It is Monday. It's August 10th. Quick update on the trades or the trading session. I've been watching the London and New York session, and sorry about that. Let me go to my daily chart here on the euro dollar. Sorry, this is the 1 hour chart. So this is the 1 hour chart. This starts the beginning of this week and the end of last week. This line right here. Let me go ahead and tighten this up so you can see where we're coming from. So we've got last week. Not too much change from the open of last week and the close of last week, and then the open of this week, of course, still in a relatively tight trading range. And I mentioned this with the update over the weekend that when price is in a relatively tight range of consolidation, I'm just going to get fewer signals. So I really wasn't comfortable with trading this as it started to break down this morning and then reversed about maybe 6-7 hours ago. There was a little movement in there. I didn't trade it. I didn't take it. I felt that it just wasn't going to go too far. I didn't even think that there was enough for it to reach today's fulcrum point, which is the 1.1807 on my charts here. There's the 1800 psychological level. It didn't even go that high. So very often when I get into these trades, if I get a signal, I need to also calculate just how much momentum, how much volume, how much participation there is at that particular time to make sure that if I get into the trade, it doesn't stall and then reverse and go the opposite direction and then stop me out. I want to make sure that there's going to be consistency and a fluid movement from the time I get into the trade, relatively speaking, to its expected take profit level. So if it doesn't look like it's going to reach any particular take profit level that I would normally trade to outside of scalping, then I usually just have to stand out of the way. And I'll show you a couple of different ways that I measure some of the the strength for the day. What kind of a day are we looking at? A trending day, or is it going to be, a choppy sideways consolidation type of day, a little bit of rotation, things like that. So there's ways that I measure that. And this is what I was looking at this morning with the euro dollar. So I stayed away from trading it both up and down. I could see that it was going to create some kind of a U-turn. It did that after the initial drop this morning, or early this morning during the London session, or just prior to. That candle right there is actually 1 hour before the London market opened. Again, my time frames, just to give you a point of reference, I'm in California, so I'm on Pacific time. I'm approximately 3 hours behind New York, so that'll give you an idea of what time you see when I start highlighting some of this candle data. So again, I could see that it was going to be one of those days where it was just going to create that U-shaped pattern, these U-turns. So we had the move to the downside, move back up, move back down. I'm just going to stay out of the way. It's just not worth trying to get into a trade and then thinking it's going to reach some expected target, and then it fails and falls short of that, and then I get stuck as it rolls over and I'm sitting there negative. So one of the things that I was looking at is I'm always going to be paying attention to volume levels, first of all. And I'm going to go ahead and leave this chart just the way it is. This is the pound. I'm going to switch to the pound in a moment, but the euro basically looks the same. Let me go ahead and switch this out. Euro futures. So I'm watching Euro futures, and you'll notice that today's trading range, this is a 30-minute chart on the Euro futures right here on the top left. I don't want to open the charts up because the candle patterns aren't really what I want to draw your attention to, but you'll notice that Friday, obviously with non-farm payrolls, there was a bigger spike in volume throughout that trading session or shortly after, and we're really not getting that today on Monday here, August 10th. I mentioned that also over the weekend that it looks like perhaps Monday might be one of those sideways moving days, and it could be a relatively small trading range from the high to the low overall. And again, that's going to mean fewer trade opportunities, and it's going to be choppy, and you can get into a lot of failed trades in a situation like that. But you'll also notice that Thursday, the volume throughout those sessions, the London and the New York sessions, you can see the volume levels were a lot higher. And then there was also a lot more strength on Wednesday, more consistent. It hasn't really necessarily spiked up and made new highs last Wednesday. But what I'm getting at is compare Monday's trading volume to all of the rest of the, like the last week or week and a half. It is a very different signature here, volume. So again, I'm going to stay out of the way when the market looks like that. And again, as I showed you just here a moment ago, the pound looks the same. Pound futures, basically the same print down here at the bottom. So if I go over here to the pound dollar, a little more movement, and it's staying up towards the highs on the pound dollar. But again, I got to be careful. When I see moves where I could see consistent U-shaped or U-turns with 3 times in 2 sessions, I'm going to stay out of the way. So overall what it's doing is it creates a range of consolidation that I can more consistently or more reliably trade a breakout when it occurs. Now, if it doesn't create a breakout, but at least I have the week's high or the week's low or yesterday's high, yesterday's low, something to that effect, because I'm taking into consideration all of that. And as you can see here, with last week's trades. We've got last week's data right here on the pound dollar. This is actually the pound dollar. This is not futures. So I can go back from the Friday non-farm payrolls to the beginning of the week. And you can see we've got last week's low, last week's high, and we're more or less trading inside of that range. Again, that does not mean that I won't have any trading opportunities. It's just that I need to be really particular. So I'm going to have to take into consideration, is price close to the highs or the lows? Is that going to have an impact? Not yet, because we're in the middle of that range. So now I'm going to be paying attention to what I have so far, which is this week's low and this week's high. And then as we roll over, if this continues to move sideways into Tuesday, then I'm going to be paying attention to Monday's high and Monday's low, which is really this week's high and this week's low. So that might give me some opportunity, whether it's going to be some kind of a breakout or some kind of a reversal. So I want to be careful here. Again, I think that even though there's a little bit of movement here, the signals aren't that strong to me. This one was one that I was actually considering, but I still stayed out of the way just because, again, the volume, the level of participation just didn't look like it was going to support a move that was going to be consistent. And I stayed out of the way. Again, sometimes you can risk and take a chance and it works out in your favor. I just want to be right as often as possible. So I'm going to stay out of the trading ranges that look a little more choppy, a little more sideways. But it always sets up another opportunity for me to trade something that's much more consistent, much more reliable. I don't know if I'm going to get a signal towards the end of the New York session. It's possible that I could get a trade. I may have to wait until the London session on Tuesday, or there could be something that develops during the Asian session. Normally, I'm sleeping during the Asian session because there isn't too much going on, but I will be watching the Asian session, and I do have price alerts once we have a solidified high and low for the day, and then I can take a look at what would be my next opportunity. So again, I can't say for sure that I won't have any trades. I'm going to continue to watch this through the rest of the New York session. Just wanted to give you an update as to what I'm looking at right now. And then for the most part, the same thing here. I mentioned that with the dollar-yen, I still think that the dollar-yen's not only choppy, but in relatively tight trading ranges. And again, you can see the reversal. You can see how it's dropping, makes that U-shape, that U-turn, and then it comes back up here to resistance and makes another U-turn. I actually had a continuation buy signal candle. It wasn't an entry, but it was a signal. And everything was confirming on that candle on the 1-hour chart on the dollar-yen. So I had to wait, but I never got my 3-pip entry. So for those of you who know a little bit about my trading strategy, I have a breakout technique that I use. It was actually the first technique that I developed back in 2001. It is based on, obviously, paying attention to the price structure, accumulation, distribution at highs and lows, and trying to determine the breakouts and the phases that we're actually watching of the consolidation. So it's all here. But one of the ways that I was able to determine or figure out how to avoid getting involved in head fakes, which in my opinion, that's exactly what this was. It was a breakout to the upside, and then the whole thing just rolled right over. One of the ways that I avoid that is by using different filters. And one of the filters that I use is to use a 3-pip entry, which means that on the signal candle, I don't get in on the signal candle itself. That's the signal candle right here. That's the signal candle. And on that candle, I have to wait until the candle's closed and completed. And then I look at the indicators, and I'm looking at the larger time frames, and I'm also looking at volume. So I'm looking at Japanese yen futures to see if there's enough participation and volume to even justify getting into a trade, if it's even going to move very far from this point anyway. So the 3-pip entry means that I have to wait until price takes out the high of the signal candle by 3 pips before I even get in. And if it does not do that, then that's more likely to lead to a head fake, which is exactly what I see here when it reversed. Now, just because it didn't give me the 3-pip entry and I see something that looks like a reversal, that doesn't always mean it's an immediate sell opportunity. Looking back, obviously it was, but it was a short-term scalp. I did not trade it. I stayed out of the way because sometimes they stop like this, and then they reverse, and then they go back up, and then they eventually give me the 3-pip entry. That was also one possibility as we were leading into the New York trading session, that I wanted to avoid getting stuck in a situation like that. But when I tighten up the charts here, overall, we're still trading inside of last week's trading range. So remember in the previous chart, I showed you last week's high and low. We're still in the middle of that range. And we're doing the same thing for the most part here on the dollar yen. So most of these currencies, most of the majors that I trade, that's what I'm looking at. I'm looking at price, for the most part, in between last week's high and last week's low. And that's going to create a little more choppy sideways price action and less reliable trades that just aren't signals, I should say. Signals that just aren't that reliable. They're a little more risky because there just isn't enough participation and volume. When there's a lack of that volume and that participation, price isn't likely to go very far, very fast. And that's what we need in order to make profits. And again, if it doesn't look like it's going to reach my expected take profit level, and there's less volume and less participation, I just have to stay out of the way. But it will always, even when I stay out of the way, it will always give me an opportunity to set something up, whether it's later in the day, later in the session, the next session, or the following day. It will always give me an opportunity. I just have to wait for it. So if I put everything right back where we were, here we are approximately in the middle of last week's trading range here on the dollar yen. And again, that's one of the other reasons why I just avoid trading it altogether. You'll notice the point and figure. Every once in a while I get questions about my point and figure. I do use point and figure for intraday trading. I also use point and figure to help me project my take profit levels. I use it on the larger time frames, the weekly, the monthly, the daily. But for intraday trading, it works perfectly, and it helps me stay out of a lot of breakouts that just don't go anywhere. They don't look right for whatever reason. The setup isn't appropriate. It was one of the things that I was actually using on Friday's non-farm payrolls. There was a little head fake to the upside, and then the whole thing kind of reversed after non-farm payrolls. And the point and figure charts were actually something that I was using that kept me from taking the bait going long when it actually ended up reversing. So I avoided that. That's a good thing. So that's it really draws my attention to support and resistance on an intraday basis, these point and figure charts. So I'm going to leave it there, and I will send out the next update about maybe 2-3 hours shortly after the rollover period today.